If you're new to property investing, then the BRRRR method could be a simple way for you to get started in property investing and extracting equity as you go. So, what exactly is the BRRRR method? Essentially, it stands for buy, renovate, rent out, refinance, and repeat. Essentially, it's known as flipping, whereby you purchase a property, you renovate it, you put it out on rent, and then you flip it so that you make some profit and you continue doing the same process again and again. So let's take a deep dive into what this actually looks like. Let's get started. So the first step is to buy the property. Now, purchasing an older property, we all know if it's a little bit run down, it's going to be cheaper, and your chances of making a good return are going to be higher after you've done the renovation. Now, what you need to consider when you're buying a property is to see whether after doing the renovations, are you actually going to see a good return on your investment? What you could do is, in the area that you're looking to purchase, have a look at some similar properties which have sold in the area before and whether they have actually increased significantly. If not, then perhaps purchasing that property and renovating it might not be the best decision in that area. You might have to look elsewhere. Now, if you've got the idea that you want to renovate a property, then perhaps putting down only a 10% deposit as opposed to a 20% deposit might be worthwhile. That way, you can save some money and put that towards your renovation costs. Alternatively, if you don't want to put down 10% and you want to put down 20%, then you just need to factor in that you've got enough savings to actually go ahead and do the renovations. However, if you've already purchased a property and you've had it for a few years and you put down a 20% deposit on it, so that means it's an 80% loan to value ratio, then you could speak to your mortgage broker or your bank to look at increasing that LVR, the loan to value ratio, to 90%. That way you don't need to put too much money from your savings into making those renovations. Next step is to renovate. Now, depending on how much money you want to put towards that renovation, this is all a factor that's dependent on your budget. Now, just a rule of thumb, people tend to put about 10% of the purchase price towards the renovations. So if you've bought a house for $400,000, then you'll need to put aside about $40,000 for renos. Now, there are 4 ways that you can go about renovating your property. Now, the first step is quite cost effective and it will save you a lot of money. That involves just getting things fixed around the house. So this could be loose screws, loose taps, door handles, little fixtures around the house that you can fix. This would also increase the value of your property as well. Not by much, but it still can make a difference. The second level to these enhancements could include cosmetic changes to your property. So this could include painting the interior and exterior of the house, replacing the carpet, installing some vanities in the bathrooms, things that make the house look aesthetically pleasing. The third renovation you can do is called spatial improvements. So essentially what you do is you try and maximize the layout of the house that you've got. So essentially what that means is if you've got a bigger room, then you might consider putting up a wall in that room. Therefore, then instead of having one big room, you've got now 2 smaller rooms. There is a larger cost involved for this, so be sure to keep that in mind. And the fourth way you can renovate is to increase the space. So essentially this could mean having an extension on the back of the house to perhaps add another room or even like a granny flat at the back of the house. So these are ways that you can increase the space of the house. Now, if this all seems like a lot of work, then what you can do is have a property manager involved as well. They can take responsibility and take care of liaising with the builders, the repairsmen, handyman people coming in and out of the house, and also obviously liaising with the tenants if there are current tenants in the place as well. The next step is to put it out on rent. Now, after having done all of the renovations, you should be able to increase your rent, especially if you've done some cosmetic changes, by at least $50 a week. So just as a guide, I personally spent about $14,000 earlier this year on renovating my property, and what that did for me was to increase my rent by $50 per week. And the things that I had changed up was I painted the house internally, I fixed all the broken things in the house, I replaced the carpet, I added some new vanities in the bathroom, fixed up the kitchen area a little bit, and that was really good because I was able to get more rental income. So by increasing my rent by $50, this means for me to recoup the costs of my renovation, it could take me about 3 to 4 years to recover all those funds. given I don't increase the rent at all. Now, I do annually review my rents and consider the market and see the situation and speak to my property manager to see whether the rent does have to be increased. So that could mean that I could recover the cost of the renovations earlier. Also, doing renovations in your property is tax deductible, so just speak to your accountant regarding this as well. The next step is to refinance your property. Now that you have renovated it, you've rented it out, now is a good time to refinance your property. So speak to a mortgage broker or speak to the bank, and this is where you'll be able to extract as much equity as you can from that property. This will mean getting a new loan on the uplifted value. So let's go through an example. If you've purchased a home for $400,000 and you've put down a 20% deposit, that means you've put down $80,000. That leaves your loan at $320,000, right? Now let's say you've done the renovations and they cost you, say, $40,000, right? Now, the value of that property has now gone up to, say, $500,000. And the loan on that $500,000 at 80% is $400,000. Now what we need to do, we need to minus the existing loan, which was $320,000 if you remember. So that leaves us with $80,000. And if we said we spent $40,000 on our renovations, that then leaves us with a profit of about $40,000 in our pocket. So if you do rent out your property and it is cash flow positive, meaning after all of the expenses that you have incurred, you are actually making a profit on that property, then this is a passive income source or an income generating asset, which is the entire aim of this game. Finally, repeat. So once you've refinanced and you've got the equity now, you can use that money to continue that for the next property that you purchase and use it towards the renovations, or you could just keep that in your pocket as a profit. And the idea is to essentially be able to recoup the costs of the renovation, to extract the equity, and to also make a profit as well. And there you have it. This is a surefire way to generate passive income through the rental returns. You'll also be able to extract the equity, and you'll also be able to work on building your property portfolio. Alternatively, if the BRRRR method is not your vibe and it seems like it's too much work to renovate the property, then what you can do is still purchase investment properties. You hold them for a period of time, and just by making minimal enhancements or no enhancements at all, so you'll also be able to refinance at that time once the value of the property has increased, and you'll also be able to take out equity that way as well. It's just that it happens over a longer period of time as opposed to you renovating and renting it out and refinancing straight away. This is personally what I've done for my properties, whereby I do minimal enhancements, sometimes big enhancements if they require it. Otherwise, it is a very passive approach for me and how I manage it with my property managers. Let me know if you'd like to see other property related videos, but that is it from me, and I'll catch you in my next video. Bye guys.